Going to be doing a room entitled Year-End Financial Tips and as well as a stock market update special for Christmas and year-end edition. So if you have a question, be sure to raise your hand, ping in your friends, and give us a call, 888-988-JOSH. If you have a financial question, come up on stage. If you have a question, I would love to hear from you. If you have any financial question, now is the time to chime. We're talking year-end financial tips. I'm Josh Jalinski, the financial quarterback. We're being joined by Tom Clancy, Henoch, Lori, Rebecca. If you have a question, we're going to do a whole radio show live where you get to ask any financial question you have. Well, as a teaser for some upcoming stories, we're going to talk about a year-end estimated tax life hack. Going to also talk about the Joe Manchin strategy, how he's outlining tax and policy changes that he wants in the Biden bill, and proposed changes to the U.S. retirement system are still on the table in Congress. Here's what you need to know. Also, retirees may score a big charitable write-off this year with a year-end strategy. So be sure to ping in your friends, and if you have a financial question, be sure to give us a call. We're going to, I have a room called the Financial Quarterback Room. We have a Clubhouse club called the Financial Quarterback. If you hit the green, little green Monopoly house, you get to subscribe to the club. And whenever we have an update, you get pinged in with a room. So first, we'll be talking about a life hack. Is a trick or shortcut or simple or clever technique for accomplishing a familiar task more easily and efficiently in all walks of life. For example, tie a colorful ribbon to your luggage to make it more easily identifiable on the airport. You know, I love black luggage because it doesn't get as dirty, but the colorful ribbon is a good life hack, even though it's simple. Otherwise, make ice cubes out of coffee so as to not water down your iced latte, or turn on your car's seat warmer to keep the takeout pizza hot on the trip home. That's a life hack. Well, believe it or not, there's a basic life hack for anyone who may have underpaid their federal estimated taxes. Leverage their federal withholding option on an IRA withdrawal. This is from IRAhelp.com. Many taxpayers need to make estimated tax payments. Generally, taxpayers should make these payments in 4 equal amounts throughout the year: April 15th, June 15th, September 15th, and January 15th of the following year. If you fail to pay enough tax, or if your payment is late, you may be charged a tax penalty. Did you take a large capital gain late in the year? Did you earn more income than expected? These could cause an estimated tax problem. If it is discovered that previously estimated tax payments were not enough to cover income for the year, a taxpayer could take a distribution from his or her IRA. The IRA owner could elect to have up to 100% withheld for taxes. This tax withholding will be treated as if it were paid in evenly throughout the year across all quarterly payments, even if the withholding tax was taken from a distribution on December 31st. That's a pretty good life hack. Note that if the IRA owner is under 59.5 and no other exception applies, there will be a 10% early distribution penalty, even if 100% of the distribution is withheld for taxes. But what do you do about the missing IRA dollars that were sent to the IRS? If the IRA distribution is eligible for a rollover, the IRA owner can replace those IRA dollars with a 60-day rollover. But weren't the IRA dollars sent to the IRS? How can they be rolled over? Well, we don't roll over the exact same dollars. We replace the dollars sent to the IRS with non-IRA funds from a savings account or other source. As long as you complete the rollover within 60 days, and as long as the IRA owner has not done another 60-day rollover well, you be good. The strategy will allow the IRA to be made whole. Now, had we attempted to make up the difference of underpaid estimated taxes with a single payment directly from a non-qualified account, like a checking account, the payment would have all counted for the fourth quarter. So that's a life hack. If you're doing an IRA rollover and you need help, be sure to call my office at 888-988-JOSH, or you get to ask me any financial question you have. Ping in your friends. We're talking year-end financial tips. Raise your hand. We'd love to have you come talk about stock market updates, year-end financial tips, and 'tis the season for charitable giving. Year-end retirees hiring a year-end donation may still score a write-off with transfers from their IRA. It's called the QCD, or the Qualified Charitable Distribution. These are direct gifts from your IRA to an eligible charity. Investors age 70 and a half and older may donate up to $100,000 per year, and it gets to count as your required minimum distribution since once they turn age 72. Now, while the maneuver doesn't provide a charitable deduction, donors may see other significant tax benefits. IRMA is a big issue with retired people. They don't like paying it. That stands for income-related Medicare adjustments. It's really a tax on seniors. You get to have to pay more in Medicare premiums when you take out your RMDs. So be sure to ask me any financial question. We have Sean come up on the stage. You get to ask any financial question you have. And so CNBC talks about this. Retirees may score a big charitable write-off this year with the QCD. So welcome to this show. Sean, do you have a question or financial comment you wanted to share with our listeners?
This is my first time that I'm on your club. I really would like to get your insight on 2022. I mean, coming into 2022. I've been reading quite a few things, and a mixture of fear and a positive outlook on the market. So really, I like your insight going into 2022.
No, thanks for the question. Well, my outlook is I think we're due for some type of short-term correction in the near term. You have Omicron, inflation fears. I think actually inflation could give way to deflation next year. We could have a sharp sell-off. I don't really believe the bull market has ended. There's too much funny money in the system. There's $8 trillion that's left without a home. Could I see the market bull end in 12 to 18 months? Sure. Could I see a sharp correction next year? I'm not that pessimistic. I think we're due for a correction. The markets can't just go up forever. Market's up about 20% for the year. We're due for 10, 15, even a 20% breather. And maybe in some cases, the last 4 weeks of choppiness is that breather before we go a leg higher. We do have a technical analyst who works with the firm. He's seeing that there is some major divergence. He's more bearish than I am, where he's seeing that four of the big five, he goes by five major indexes: the Dow, the NASDAQ, the S&P, the Dow Transports, the New York Composite. Typically, when you see a bull market, all five of those indexes are hitting new highs. And when you want to see one indicator would be divergences. So a divergence might mean one of those five indexes is hitting a new high, but the other four are hitting lows. They've not exceeded the highs of early November. So that's kind of a bearish sign that is keeping us up. We are looking. I own a fee-based fiduciary firm called Wealth Quarterback, where we manage money for investors. So I'm not that bearish or bullish. I just think people should be cautious right now. Does that help, or do you have any questions?
That helps. That helps. Of course, I have some more questions, but I really want to hear what others have to say. You can go. Shit.
No, thank you, Sean. So next, we're talking about qualified charitable distributions. And if you have a financial question, we're talking year-end financial tips, stock market tips. The QCD is one of the best year-end financial tips. You get to divert your RMD from your IRA. So an RMD is a required minimum distribution. You get to give up to $100,000, and that money doesn't count against your taxable income. That's a great tip if you want to give to your favorite church, charity. You could also look at charitable trusts, charitable remainder unit trusts. Okay, next up we got Matthew. Welcome him to the stage in a little bit. But first, we're talking about qualified charitable distributions. Now, the primary benefit of a QCD is that the transfer doesn't count as taxable income. Since fewer Americans itemize deductions, they don't get the typical write-off for charitable gifts. However, people taking advantage of the standard deduction can get a massive benefit from a QCD because it won't be part of their adjusted gross income. Moreover, a QCD reduces your IRA balance, cutting the size of future RMDs. So if you have a question about topics we're discussing, be sure to raise your hand, call into the show, or call my office at 888-988-JOSH, and we'll give a free year-end review. Call us 888-988-JOSH. Now, while most people don't make charitable donations solely because of tax breaks, QCDs may offer a big one, reducing your AGI, or adjusted gross income. That's important because higher adjusted gross income often triggers a lot of other tax ramifications, such as higher Medicare taxes. For example, more adjusted gross income may cause a hike in monthly premiums of Medicare Part B and Part D. In states like my own state of New Jersey, if you make too much money and you're retired, that may hurt you from getting the property tax freeze. Another example is the medical expense write-off. Those who itemize deduction may claim a tax break for qualified healthcare expenses that exceed 7.5% of AGI. However, if you make higher income, it creates a steeper hurdle to claim the deduction. QCD missteps. One of the biggest issues with QCDs is that the transfers aren't separate on the Form 1099-R form, which reports retirement plan distributions to the IRS. So a lot of people's accountants will misappropriate that, or if people do TurboTax, they get a 1099-R and they think it's taxable. Or if it's a QCD, it's not necessarily taxable. For example, let's say someone withdraws $50,000 in a year and $20,000 is for a QCD. The form will still report $50,000 in total distributions, even though $30,000 is only taxable. Additionally, the payment from the IRA must be made out to the charity. If someone writes a check from their IRA to a charity at the end of December, it must clear from their IRA by December 31st to count for the year. So if you give to your favorite church or charity, mosque or shul, now is the time to do so with a QCD. It's a great way to give to your favorite charity. And if you're retired, you may bypass the issue by having your custodian cut the check, which is generally a recommended thing if you're doing the QCD. So tell all your friends to come into the room. We're talking about year-end financial tips and a stock market update. So you get to ask me any and every financial question you have. Now, 2 years after Congress passed a law that ushered in improvements to the U.S. retirement system, Lawmakers' efforts to make further enhancements are moving forward, albeit slowly. All catch-up contributions to 401k plans and the like would be treated as Roth contributions, i.e. after tax. Current law allows workers to choose whether to make those contributions on a pre-tax or Roth basis, assuming the company gives them the choice. Now, there's bipartisan backing for measures in both the House and Senate that would build on the 2019 Secure Act, which aimed to increase both the ranks of savers and retirement security. According to CNBC.com, while progress on the proposals has been slow, there's hope for action in 2022. At the end of the first quarter or beginning in the second quarter, we could see action on the bills in both chambers, says Paul Richmond of the Insured Retirement Institute. Most recently, House Education and Labor Committee last month approved the Rras Act, a series of retirement-related provisions that fall under its jurisdiction. It has some overlap with another bill, the so-called Secure Act 2.0, H.R. 2954, which cleared the House and Ways and Means Committee in May. Both were approved unanimously by a voice vote. Meanwhile, the two bills in the Senate that are similar to those in the House, the Retirement Savings and Security Act, Bill S1770, and Bill 1703, the Improving Access to Retirement. However, neither has received committee consideration yet. So if you have a question for me, give us a call. I am Josh Jalinski, the financial quarterback. And a lot of what we're covering may be confusing and even intimidated, but I'm here to tell you with the right team on your side, you can achieve a lot. So call my office at 888-988-JOSH for no obligation review. Or if you have any financial questions, be sure to ask me. I'd be glad to answer any year-end financial tax tips. Make sure you fund your Roth IRA. The Roth is one of the single greatest tax benefits in the tax code. You get to put your money away and the money grows tax-free and blossoms tax-free. Now, here are some of the main provisions that are covered in the bill. Number one, retirement required minimum distributions, otherwise known as the RMD. The Secure Act changed when the RMDs would go from 70.5 to 72. Under the new proposal, RMDs would move to 75. Does anybody know about that? Does anybody like that aspect of the bill? I'd love to hear from you. Now, the Senate proposal would raise the RMD age to 75 by 2032. I don't know about you, but I would love to see the RMD age increased now. It would also waive RMDs for individuals with less than 100 grand in aggregate retirement savings, as well as reduce the penalty for failing to take RMDs to 25%. Most of you may not realize this, but if you don't take an RMD, so if you have an IRA, and forgive me for the alphabet soup, but if you have an IRA and you fail to take an RMD, your minimum distribution, get this, you got to pay a 50% penalty. The bill is talking about reducing that penalty to 25% from the current 50%. It's kind of a stupid tax for people who fail to take an RMD. Current law allows retirement savers age 50 or older to make so-called catch-up contributions to their retirement savings on top of the standard annual amount. So we're going to be joined by Craig pretty soon. If you have a question for us, give us a call, 888-988-JOSH, or feel free to ask me any question about these new laws. Both the House and the Senate proposals aim to expand those amounts, although the specifics differ a little bit. Current law allows retirement savers age 50 or older to make what's called a catch-up contribution to their retirement savings plan. So you get to do a catch-up plan to your retirement savings on top of the standard annual contribution limit. So if you have a 401k, the most you can put in if you're 49 or less, age 49 or less, is $19,500 for 2021, and you get a catch-up of $6,000 as well. Those who qualify can put an extra $6,500 in their 401k or $1,000 into their IRA. So $7,000 is the max you can put in an IRA, and about 20, soon to be $27,000, $26,000 currently, the max you can put in your 401k. So that's question number one. Have you maxed out your contribution to your Roth, your 401k? So we talked about QCDs. Have you taken advantage of the qualified charitable distribution? We're also talking about IRAs. Have you maxed out your IRA? Take advantage of what the tax man giveth. The tax man giveth and the tax man taketh away. Now, the House provision would adjust annual catch-up amounts based on inflation and would expand the 401k catch-up to $10,000. Do you like this idea? They would expand the 401k catch-up to $10,000 for individuals who are age 62, 63, 64. Would you like this idea? Let me know. Do you like the idea of the catch-up? So if you're 62, 63, or 64, the government's going to let you put in an extra $10,000. Workers enrolled in so-called simple plans would be allowed a $5,000 catch-up up from the current $3,000. Now, Senate provisions would also index the IRA amount to inflation, but is more generous with the 401k catch-up of $10,000. It would apply to people age 60 or older. The idea is you are closer to retirement, so you need that money quicker. So we're going to let you put in more. I actually think, though, it's dumb because you should be giving the catch-up to people in their 20s so that they take advantage of the tax benefits of the 401k and compounding. Now, the House proposal would also change the tax aspect of catch-up amounts as a way to offset any revenue losses from other provisions. Additionally, matching contributions from employers currently can only be made to pre-tax accounts. Provision in the House bill would allow them to also match Roth contributions if the employee wanted to go that route. I think that's a good idea. So we'll welcome Lior. Lior, do you have a question for me or financial comment or question for the financial quarterback? For those of you just joining us, I am Josh Jalinski, the financial quarterback. Go ahead, Lior.
Hi, Josh. How are you? Thanks so much for bringing me up. I got my kid here, wants to play. So, yeah, I just saw the title. I'm trying to look at some year-end. Yeah, I'm just trying to look at some year-end actions. And one thing in particular that I wanted to ask your opinion about is Roth IRA and potentially putting assets other than, traditional stocks and ETFs in there.
So a Roth IRA and putting in non-traditional investments, what non-traditional assets are you referring to?
For example, Bitcoin.
So you can own within a Roth IRA, and I'm not recommending anyone buy or sell anything over the airwaves, but you could buy their various trusts that you can buy at most brokerage accounts. There's, we're not recommending buy or sell these, OBTC, there's GBTC. You can buy various Bitcoin related, now a new Bitcoin futures ETF is out. You could also look at self-directing Bitcoin. There are various self-directed IRAs that you could do, although I would caution you, a lot of these companies are new, they're disreputable, they don't have a track record, so I would be careful. I would trust a more reputable custodian like Fidelity. Fidelity is getting into the space. I'm an RIA, and we actually, that stands for Registered Investment Advisor, and we do fee-based fiduciary work, and we can open up accounts at Fidelity or Schwab or Interactive Brokers. Interactive Brokers just cut a deal with Paxos to add crypto within their custodial arrangements. So I'm more of a fan of using a third party independent custodian that's reputable rather than kind of some fly by night new self directed IRA. You also want to be careful with self directed IRAs that you're not be deeming to have self custody because that could invalidate some of the tax benefits. So, do you have any other follow up questions to that, Lior?
No, really appreciate the insight. So just in general, it's a really brief, essentially what would be your, year-end items to look at. Obviously, you have to, work with CPA to get things actually done properly. But other than tax loss harvesting, which a lot of us are doing, is there any specific, bullet points that you could, point out or shed some light on for us to go and ask the right questions,
Yeah, I'm going to give you 10 tax tips. Actually, I have a book. It's an Amazon bestseller, Retirement Reality Check. You could go get the book. I outline a host of tax tips. You can get a ton. Right now, you can look at number one, maxing out your 401k. A lot of people still don't max out their 401k. Number two, look out at maxing out your Roth 401k. Although you don't get a deduction, a lot of people make too much money to do a Roth. Maybe you make too much money to do a Roth. Consider a solo Roth 401k for your business. Consider opening up a Roth 401k business. So you could look at a traditional 401k, tax tip number one, tax tip number two, a Roth 401k, tax tip number three, a solo Roth 401k, tax tip number four, look at defined benefit pension plans. You could get a $200,000 to $300,000 write-off depending on your age. Tax tip number five, look at a qualified charitable distribution. Tax tip number six, don't just talk to your accountant. Sometimes accountants are too busy. Sometimes accountants are too square. Enlist a financial advisor who could work with your accountant to do some creative investment planning from a tax perspective. Tax planning tip number seven, consider a profit sharing. A lot of people don't know this. For minimal cost, you can sock away like 60 grand, 60 to 70 grand a year and get a tax write-off. So if you're not looking into profit sharing, you should. Also, I don't know where I'm at. Am I at number 7 or 8? Who's keeping track? I'm just making, what am I at, Lior?
I've got 7 so far.
Okay, so I'm just coming up with 10 tips on the fly. Tax tip number 8, you could look at donor advised funds. If you give money to church, charity, shul on a regular basis, look at giving a tithe from a donor advised fund. Tax tip number 9, you said it before, but tax loss harvesting. A lot of people don't do that. Maybe they have a winner and they have a loser. Like, I'm not recommending anyone buy or sell this, but I've thought about it. Even me, I'm the financial quarterback. I have a radio show on one of the biggest radio stations in the country, WOR. We're on iHeartMedia. And I sometimes forget to tax loss harvest because I'm so busy helping my clients. Also, we could look at HSAs, health savings accounts. That's another tax tip. That's where you get a write-off. You actually get triple tax-free dollars. You get a deduction on the way in. You get money that grows tax-free on the way up. And you get money that's tax-free on the way out. And my final tax tip is spend your flexible savings account. And I'll give you an 11 tip. You could look up non-qualified deferred compensation plans. So there's a lot you could do. A lot of people don't really, they think of, okay, I'm maxing out my IRA, I'm maxing out my 401k. There are so many other tax tips. You could look at trust jurisdictions, life insurance. I reevaluated my life insurance, all that stuff. So any other follow-up questions, Lior, before we go to Craig?
No, I really appreciate all the insights. I can share that I used a dependent care FSA, and that's saved me some on the care for my child. So if you have that through your employer and you haven't taken advantage of that, that's a good one to look at too.
Wonderful. And if you're negotiating a raise or something like that, or a bonus, maybe have that bonus flow into a 401k or an HSA. That's sometimes a great benefit, so you're not taxed on that bonus. So next up, we're going to go to good buddy Craig. Go ahead. You're on with Josh Jalinski, the financial quarterback.
Josh, appreciate you bringing me up. Hey, quick question. Is it better to do gas receipts, keep your gas receipts all year long and then take the 50% of the total amount off your taxes, or is it better to do a per mileage log? What's your thoughts?
Depends on how many miles you drive. Okay, so back in the day, I used to drive like 30,000 miles plus a year. And that would be, obviously, it's better to take the mileage. Now, in light of COVID, and I have a Tesla, so I kind of save on that. I actually take the car payment as the write-off, and then you save your receipts and things like that. So it really depends on, you want to seek advice from your CPA. It also, but you want to look at one thing, you have that cargo capacity. So if you get this, it's like called the Suburban write-off. There are a lot of.
I've got a 2500 HD diesel, so it's over 6,000 pounds.
So I don't know if you know this, but you can write the entire purchase price of that. And a lot of people bought those before they had that, the bonus depreciation. So what a lot of people are doing now is they are selling those cars used because they command a massive premium, and then they're buying them new. So we bought like a Nissan NV for our business purposes, like when I'm on the road and I'm traveling and I have to hold gear for my radio show. And for those of you just tuning in, I'm Josh Jalinski, the financial quarterback. Be sure to follow my club, the Financial Quarterback Club, so you get updated whenever we do a show. But I have a Nissan NV, which is a massive car as well. And with the Trump tax code, you get the whole thing as a write-off now, which is massive. So I hope that helps. Any other follow-ups on that, Craig?
No, you're good, dude. Thanks so much.
So do you drive a lot now? Or, I mean, I think in light of COVID, now with people driving less and doing Zoom, you may want to look at taking the car payment as the write-off.
Yeah, I actually, I still have to haul a lot of medical technology in my truck. So I'm still doing a decent amount of driving, but I'm taking the payment off. But at the same time, I haven't been keeping a log for my miles. I've just been keeping all my gas receipts. And then I was thinking about just taking off all the gas, the fuel, you know what I mean? Half of the fuel. So as an additional write-off. So that's all.
Yeah, I would look at doing both and seeing what comes out better. Can you reconstruct your mileage based on where you were?
Yeah, I could be probably 98% accurate on it. Yeah, absolutely.
So I would look at doing that and kind of like running the numbers to see what's better.
Okay.
So great question. Any other things?
Dude.
And Craig, what are you doing? Are you doing anything year end to save on taxes?
I'm trying to think. Well, last year, I believe it or not, I converted my traditional Roth and my traditional IRAs into Roth. So I paid the taxes last year. So from this standpoint, for this year, I've maximized pretty much all of my tax savings that I can think of, especially the 10 that you wrote down. The only thing I haven't done is I make too much to do a Roth IRA, but through the company that I'm with, for my full-time gig, I have a Roth 401k, so it doesn't matter how much money I have, because it's part of a company, I can max out that Roth 401k. I think it's like 19,000 this year.
Yeah. How old are you? If you don't mind me asking.
47.
Yeah. So yeah, it's 19.5 this year. You definitely want to take advantage of that, because if you make too much money to do a normal Roth, that's a great way to sock away money tax-free. You could also look at, do you do a defined benefit pension plan or profit sharing? That may be something you want to add to your self-employment.
No, I've never done that.
Because that's a very powerful tool, and you could get significant write-offs, 100 grand plus in some occasion. So message me there, or you can call my office at 888-988-JOSH and just leave a message.
All right, I'll shoot you a text. Thanks,
Awesome.
dude.
Thank you. Next up, we have Owen, the points partner.
Good morning, good afternoon, or indeed good evening to you all. Josh, an absolute pleasure to see you again. You and I speak offline, and obviously I've done your radio show as well. Just here to support, here to listen, to learn, and if I can be of any use to anyone, I'll be sitting down here.
Now, Owen, you are the credit card points guru, probably in the country, the leading person that I would go to for all things credit card points related. Do you have any year-end credit card point tips?
I think it's curious that you should ask me this. I was running a room earlier today, and somebody asked me the same thing. Where the credit card world has differed to the rest of the traditional financial markets in the last couple of years is COVID decimated the major players: American Express, Chase, Citibank, and Capital One, and the reason for that is that all of the credit card benefits are travel related, and obviously COVID shut down travel. So what happened was, after about a year, all of the credit card companies put out crazy deals. The sign-up bonuses for the minimum spend on these cards went through the roof, and then they all started competing with each other. So there's actually been more activity in the last 18 months than there has been in the last 20 years of credit cards. It's been a really interesting time. So there's no particular activity to take this second before the new year or Christmas. But I would say this: there has never been a better time in financial or credit history to get a new credit card. Hence my website. The numbers have gone through the roof. I've seen more people have applied for credit cards on my website in the last 12 months than they have in the last 10 years. That's how good the deals are right now. So there's not something specific before Christmas or New Year's. The only thing I would watch out for is the New Year's turn. If for those of you that have any premium credit cards, if you have the American Express Personal Platinum or Business Platinum or the Chase Sapphire Reserve or any of these high annual fee cards, there are benefits that either get switched off on January 1st or run out at the end of December. So make sure you've used all of your credits, in particular for Saks Fifth Avenue, for Uber, and Dell. Those are the three big ones that run out at the turn of the year.
Yeah, well, thank you so much, Owen. You're always a wealth of knowledge. Next up, we're going to go to Parveen, and folks, ping in some of your friends. We're talking year-end financial tips and more. Also, stock market update as well. If you want to talk stocks, where the stock market is headed. Next up, we have Parveen. Go ahead.
Hey George, thanks for bringing me up. Since you mentioned the stock market, would like to actually get your opinion. And my question was also related. I wanted to ask about wash sale. So if I sell a stock at a loss, and if I want to buy a option like a leap for that, if I do that within 30 days, like sell the stock, buy the option, does that still count as a wash sale or would it not?
You know, that's a tricky, I would ask your accountant. Generally, what Parveen is referring
Josh, you're muted.
What Parveen is referring to is there's a wash sale rule, and you know, basically that's not my area of expertise. I would talk to your accountant about that. But basically, the wash sale rule states that if an investment is sold at a loss and then repurchased within 30 days, the initial loss cannot be claimed for tax purposes. In order to comply, investors must therefore wait at least 31 days before repurchasing the same investment. So I've heard people get in trouble. For example, let's say you buy SPY, the ETF, and then you try to buy IVV, which is the same basic Vanguard S&P 500. It depends on who your auditor is. Sometimes I've heard people get in trouble with that. I'm assuming that may apply with leaps. But for example, you could buy an ETF, and I'm not recommending you buy, or sell any ETFs, but there are some other ETFs that might similarly track the overall market, like, for example, like QUAL, but they're not going to trigger that wash shell rule the same way. So I hope that helps. I will look into leaps if you message me, and I'll try to get back to you with an answer from my accountant buddies, okay?
We'll do that. Thanks. And since you mentioned ETF, so the strategy you mentioned is good. So like you mentioned SPY. So if we sell SPY, we cannot buy a Vanguard 500 ETF, but you can buy a VTI, which is the total market. So
Exactly.
instead of 500 companies, you have like 3,000 companies in there. So it's not the same thing. It's not the same. It's not considered the same ETF, but their returns are same. They track pretty much neck to neck.
Yeah, or you could buy Dow instead of S&P, but yeah, you can't. Some people think the wash shell rule allows them to sell one version of an S&P 500 fund and then buy it back. That usually is contested by the IRS. So
Right. Yeah. The wording says you cannot buy similar security. So that similar is a broad. I mean, they can bring in different things in it. What are your overall thoughts about the market? A lot of chatter on the online social media word about the Santa rally. Uh, your thoughts on that, or like going into the new year with the um, rates probably going up, like the Fed mentioned 3 times next year, and tapering also starting next year. Have we reached a top, or could we still push higher?
well, my chief market strategist says we're pretty much nearing a top, but basically it depends on what happens with the big five. You have the Dow, the NASDAQ, the S&P 500, the Dow Transports, and the New York Composites. They were each making new highs, and then we've kind of had a stalled market since early November. The only one that is sort of looking to break out into a new high is the S&P 500. So for me to be fully bullish, I would want to see 3 of those 5, the S&P, the Dow, and really the NASDAQ as well, start pushing to new highs. Right now, I'm sort of neutral. I'm neither bullish nor bearish. I think we're due for a 10 to 15% correction. I don't fundamentally think the bull market is over. And here's my corollary. I just don't feel it in my gut. We got $8 trillion of Fed money just flooding the system. I don't see that the Fed will really raise rates. What I think is going to happen is we're going to have like a little mini correction, call it 10%, call it 15, call it 20 sometime next year. And then the Fed will start pumping the brakes again on interest rate hikes. I don't think we're going to have interest rate hikes. You might have an end of tapering. I think if we have rate hikes, we definitely will have a major correction. But it'll sort of be like December of 2018. There was all this talk about the Fed raising rates. They were raising rates significantly. Then Trump started fighting the Fed, and the market started fighting the Fed, and then Powell sort of cowered back and didn't raise rates. Here's my thing. I don't think raising rates is bad for the economy. Raising rates is a good thing. It means our economy is healthy and strong. So I don't understand why people don't want us to raise rates. I think fundamentally, we've been in this kind of world where we have a Fed put. I think the Fed needs to come out and say, I actually think they should have fought Donald Trump when he was having sort of a temper tantrum that they weren't raising rates. And I think they should have raised rates when the economy started to improve in 2015 and 2016, a little bit with Obama. But the Fed has become, from being a non-political institution, it's really very political. They don't want to take too much political pressure, so they tend to have a cowardice. And, I want to see somebody fearless at the Fed, but, we don't have that. And basically what's interesting to note is Biden kept the Trump Fed chairman? So great question. Folks, if you have a question, be sure to raise your hand and you can give me a call. I'll give you my number, 888-988-JOSH. If you want a free review for anybody, I'll give a free year-end financial review. We're talking year-end tax tips. We're also talking stock market outlook and update for those of you who want to know what to do with your money. We're not giving personal advice, but hey, we're here to give some financial tips. So give us a call, 888-988-JOSH, if you want personalized help, or you just get to ask me any question you have on your money. I would love to get to know you. For those of you who don't know me, I am Josh Jalinski, the financial quarterback. I run a financial talker weekend show every Saturday and Sunday at 9 on one of New York's biggest talk stations, WOR 710 AM. So if you have a question for me, now is the time to ask. Ask me any question you have. I'm going to wrap up the show in a little bit. So if there are any questions, be sure to chime in. We're talking year-end tax planning. We're talking what to do with your money. I'm also talking right now, before some of these great questions, I was talking about what Congress is doing to change the retirement system and even kind of what's going on with financial things. We talked about a change in the RMD rules, a change in the 401k rules. They're increasing the $10,000 limit. So whatever question you have, no question is a dumb one, except the one that you do not ask. So what are some other things Congress is looking to change when it comes to your money? Well, student loan debt. Most companies that offer 401k plans will match your contributions up to a certain amount. For example, you'll get a 100% match for the first 3% you contribute, with a 50% match for the next 2%. For workers whose student loan debt keeps them from putting money into their retirement accounts, it means missing out on that company money. In both the House and the Senate provisions, employers would be permitted to make contributions to 401k plans on behalf of employees who are making student loan payments instead of contributing to their retirement plan. Auto enrollment in 401k plans. A provision in the House would require employers to automatically enroll employees in their 401k. How do you feel about that? Let me know. I'm dying to hear what you think about this. Would you be okay with your employer forcing you to put in money from 3% until the worker's contributing 10% of your pay? I think it's a great tip. I don't like the idea of the government really forcing people to do things. I don't know about you, but I'm like, I want to control my own money. I don't want the government to tell me what to do with my 401k. So I kind of think that that's a little bit, government overreach. So what say you? Give us a call, 888-988-JOSH, or on mic and ask me any financial question you have. Annuities are something that people want to know about. One option that's in the new bill. So there's a new bill that Congress is talking about passing. There are various versions in the Senate and the House that are redefining what retirement means for you. So both the House and the Senate propose creating a national online lost and found database for retirement accounts. Have you done this? Have you gone on the site Missing Money? I want you all to go on that site Missing Money. And what you'll realize is a lot of you are missing money. I don't know about you, but I went on this site and I realized I was actually losing out on money. I found, sometimes money on the Missing Money website. Have any of you ever gone on the Missing Money website and found money? I would love to hear from you. Under the provisions in both the House and the Senate, part-time employees who work at least 500 hours for 2 consecutive years would be eligible to participate in their company's 401k plan. Also, there's something called the QLAC, which stands for the Qualified Longevity Annuity Contract. Congress is going to be passing some rules to make those easier. So what a QLAC is you put in money and you don't have to take your RMD from that money, and it grows tax deferred, and you make sure you never outlive that money. So some people like annuities, some people don't like annuities. I'm not actually a big fan of the QLAC, but it is cool that you get to put money in there and you don't have to take your RMD. In other news, Joe Manchin, the wealthiest Americans now feel relief, and their new hero is Joe Manchin. The wealthiest Americans feel relief as tax hikes are canceled for now. If West Virginia Senator Joe Manchin has his way and he votes against Joe Biden's signature economic package, as he said he would last week on Sunday's morning shows, rich Americans will escape any tax hikes, saving the top 0.1% hundreds of billions of dollars over the next decade. Manchin's vote against Biden's economic plan means Americans will escape tax hikes, saving hundreds of billions of dollars over the next decade. I don't know. Here's what I think is going to happen. I think Manchin will force Biden to readjust some of his plan. They will have a neutered spending package. It will be passed so that Biden can say he won. A lot of this is optics. I don't really see Manchin as the savior of mankind like some people are purporting him to be. I don't know. Do you like what he's doing? Do you not like? Now, there are also many new bills that were introduced in 2021 that may raise revenue, i.e. raise taxes on people who are dead. That's called the estate tax. The estate tax is wildly unpopular, yet people tend to bring it back. People do not tend to like the idea of tax hikes. So give us a call, folks, 888-988-JOSH, 888-988-5674, or ask me any financial question you have. Could be on stocks, bonds, annuities, mutual funds, whatever question you have. No question is a dumb one, except the one that you do not ask. So give us a call, 888-988-JOSH. That's my personal office line if you need help, or you get to ask me any question you want now for free. I give tons of information and value-laden financial tips. I'm also going to give you, as we conclude the show, I'm going to give you some 5 areas that you should address right now to save yourself some tax hits. What are they? I'll tell you that right now. Number 1, do some tax estimations with your CPA. Number 2, tax loss harvesting and rebalancing. Number 3, review your retirement accounts and year-to-date contributions. Review your accounts and see what contributions were made this year. I meet with so many people, they don't max out their retirement plan. They don't max out their Roth. They can put in 26 grand or whatever it is, right, this year, 26.5, and instead they put in 20 grand. You may be able to defer additional monies by increasing your withholdings on the remaining checks this year. Self-employed individuals could bonus themselves and defer the payments toward their retirement. So if you have a question for me, I would love to hear from you right now. Raise your hand. We'll bring you up on stage. Get to ask me any financial question you have. I'm talking about 5 more year-end tax tips. We talked about rebalancing. Rebalancing at the end of the year may make sense. You can realign your assets with your goals, objectives, and risk tolerance. Just make sure that this is coordinated with your year-end tax picture. A lot of you are worried about the market crashing in the new year. Is the government headed towards a freight train with the amount of debt? A lot of people are saying like Joe Manchin's no vote is a bad thing for the economy, bad thing for the stock market. I think it's good because it means there's an appetite to cut the debt. I don't know about you, but I don't want to bankrupt my kids. I have 7 beautiful kids. I don't want to bankrupt their future because we don't want to pay the bills today. So you can also make a charitable donation, give to your favorite charity, and you can do so much to double check your year-end tax tips. We talked about zeroing out your flexible spending account, but that's something that a lot of people don't do. I'll be honest, one of my guilty things that I feel bad about is sometimes I've let my flexible spending account go to waste. Do you know you can buy contacts with your FSA? I don't know about you. I'm going to buy some contacts when I go home today with my flexible savings account. Also, you can look at creating an IRS account online. So, folks, I want to thank you for joining me. If you have a financial question for me, raise your hand. If you want to know about what I think about the economy, tax tips, year-end tips, giving tips, crypto, whatever question you have, no question is a dumb one except the one that you do not ask. I want everybody to hit the little green sign and follow the club, the financial quarterback. I will be giving a series of impromptu discussions about your money. So stay tuned. We're going to give you updates. Now, this is pretty crazy. Crypto is barreling towards a 2022 after adding over 1.5 trillion in value. Is it a bubble? I think crypto is a bubble. Probably not Bitcoin. I think Bitcoin's here to stay, sort of like the internet money 2.0. But I think a lot of these cryptos are scams centralized around some key actor who wants to become a billionaire. And it's sort of like a scam for many unsuspecting people, particularly in social media. So give us a call, 888-988-JOSH, 888-988-JOSH. I'd love to meet with you. Message me. My email, josh@jalinski.com. And we'd love to meet with you, shake your hand. Thank you for tuning in. If you have a question, I have about 1 minute left for questions. If you have questions on stocks, bonds, annuities, mutual funds, and we're going to go to George, who has a question. Go ahead, George.
Hello, sir. Thank you so much for bringing me up. Leaving, doing some Christmas shopping, and have enjoyed all the information thus far. My question is pertaining to, I started my Roth IRA this year, and I will be maxing it out this year, putting my last bit in to take it to the 6 that I can put in. My question is, does it make sense to do multiple Roth IRAs? Or is there a smarter way to save money in that, I guess, in a similar way? That's the first question.
What do you mean multiple Roth IRAs? I mean, you could have a Roth with Vanguard, a Roth with Fidelity, a Roth with Schwab. Why wouldn't you want to consolidate that with one place? Is there a reason?
Well, I was under the impression that I could only put a max of $6,000 in the Roth IRA. Am I incorrect?
Are you 49 or younger?
Yes, sir. I'm 37. I just turned 37.
That is correct. So what you're saying is, could I do something beyond? So you want to take advantage of the $6,000 going into Roth. Are you self-employed?
Yes, I'm actually an independent contractor. I work in film and television.
So that's really cool. You could do a 1099 because you're paid 1099. Call my office, 888-988-JOSH, and I can show you how to create what's called a Roth Solo 401k. And you could sock away $19,500 in a solo Roth. That's a very solid tip for you. You can also look at cash value insurance. Grows tax deferred, can be pulled out tax-free like a Roth. HSAs, you get a write-off going in, and you can pull it out tax-free like a Roth as well. So you can look at HSAs, you can look at cash value life insurance, you can look at Roth 401ks, you can look at solo 401ks. So let's say for the broader listening audience, let's say you're not self-employed, you can't do a solo 401k, but you can petition your employer to create a Roth 401k. And if you need my help to persuade them, we can. They should Roth 401k has been around for a while, but some employers are still kind of trapped in the Stone Ages. So there would be a benefit for doing a Roth 401k or a solo 401k that has Roth privileges and doing a regular Roth if your income limits suffice. There is no income limitation, meaning you can make $1 million a year and do a Roth 401k. With a traditional Roth, once you make over a certain amount, you cannot do a Roth. Now, you can do a backdoor Roth for 2021, and I can tell you how to do that. Just give me a call, 888-988-JOSH, and request a free review. Just leave a message. Someone from our office will get back to you tomorrow if you want. Okay?
Okay, yeah, thank you so much. Because, yeah, I'm also at that point as well where I'll be passing the max that I can. I mean, the amount of money I make this year won't allow me to contribute anymore. So I'm maxing it out at the 6. But that's every year, correct? So I can start over in January and put into that Roth, or would I not be allowed to since I made more money? I made enough to not allow myself to put into that same Roth. I'm sorry, I'm just all over.
So what is your income this year?
It will be at least 150 this year.
Are you married?
No, sir, I'm single and no children.
Okay. So basically, you're not going to be able to do the Roth if you're Magi. So, hey, it's Christmas. So there's something called, the gift of the Magi. Well, there's the Magi of Christmas, and there is the Magi, which stands for Modified Adjusted Gross Income. If you file taxes as a single person, your modified adjusted gross income must be under $140,000 for 2021 to contribute to a Roth IRA. So how do you kind of get around this? Well, maybe we do a solo 401k for the write-off to bring your income below, and you do the Roth as well. So there might be ways that you could take greater deductions if you're self-employed. We will work with you. That is why I'm called the financial quarterback. Your finances are not just one-dimensional. So I'm not an accountant, don't claim to be, but I'm a financial advisor who will work with your accountant to make sure which of these strategies is right for you. So imagine you sitting at a table and having your accountant, your attorney, your financial advisor all under the same roof saying what's best for you. That's what we do. And feel free to message me or call me at 888-988-JOSH. I want to thank everybody for joining us, and give me a call, 888-988-JOSH. Wish you all a blessed holiday. Happy Hanukkah. Merry Christmas. Happy New Year. And it was a lot of fun. I'm going to end the show. Give us a call, 888-988-JOSH, 888-988-JOSH, and hit the little green sign. Also, follow me. Touch my face and follow me. That way you can see anytime I'm going to be bringing up doing these impromptu financial rooms. 888-988-JOSH, 888-988-JOSH. Thanks so much for joining us. And also you could message me if you have a question, 888-988-JOSH. Take care.
Thank you.
Bye now.